Okay, the next pair I'm looking at this morning for the 17th of February 2011 is the US dollar against the Swiss franc. I've got up here on my 6 time frames. I'm just going to have a look at the daily to look at the overall trend. And what we've seen in the past couple days is the pair, the US dollar finding a lot of strength against the Swiss franc, but ultimately in the last couple of days of this week we've seen the pair fall over and subsequently retesting a previous support area. Okay, here at 955. Now, you'll notice that the pair has traded above the 50 period. This is the first time the pair has actually broken above the 50 period moving average, this purple line, for the first time in as many weeks. In fact, the last 2 months of trading. So, a bit of a bullish sign. You'll notice that the highs are slightly higher than the previous one, which is confirming that there is a slight shift in momentum. Ideally, what we want to do is see the price find support now at 95500 and kick off to the upside, because what we're seeing is the move, the initial move, starting, consolidating, breaking out, and then taking off, and then pulling back. Now that pullback occurred at a previous high here at 975. Okay, that we saw back on the, I think it was the 11th and 12th. Yeah, the 12th of this month, the last month. Apologies. Of Jan. Okay, so resistance met, pulled back. Now what we need to do is to obviously be trading above 975 in order to even consider looking at the 10150 mark. Ultimately, that would be the next target in this 105 and further to the upside. So ideally what we want to do today in particular is to see the pair trading above its Asian market high. Okay, so the high of 0.9601 would confirm that we could see further extensions to the upside, and then what we're looking for is for the US session to take that momentum and trade it higher. So whether we get it in the European session today, this morning GMT, or we see it US this afternoon, we'd like to see it trading higher than that. Then it would confirm that we're seeing a bounce, just a bit of a pull, a little breakout fake, but body must close higher on these two moving averages today to confirm further upside in the next couple of days of this week. Okay, although what could happen is we could see the pair trading below this, closing lower during either this morning's European session, seeing the pair pull back probably, and then kissing the underside of this resistance level at 955, and then continue to the downside. Okay guys, that's effectively what we're looking for. You can see as we speak, 4 hours been breached, so is the hourly. There's a nice consolidation and a breakout as we speak, as we move into the early parts of the European session. You can see the bounce we saw at the Asian market low, we saw at 2 o'clock this morning GMT, has been breached. Now we just need to stay lower than that, but be aware that on the bigger time frame, that 9555 is the one to be aware of. Okay, there we go. You can see right now as you speak, the 9555, the 555 mark is being tested, and it happened to be where price attempted at 917 or 930 last night GMT. So got a break and close lower than that to see confirmation of further downside movement. And that was what we could see, is this pair bouncing along this line here at 9555 and then bouncing back up to the upside. There you guys, that's US dollar against Swiss franc. I'll be back next with the US dollar Japanese yen. Take care.
Morning everybody, I'm just going to go through a quick 4 major analysis update for the 23rd of February 2011, starting with the euro against US dollar on our 6-screen CTC template you can see in front of us, starting with daily right through to our 5-minute candle. Okay, let's have a look at the price action yesterday on a daily time frame. You'll notice that the pair has been in an extended uptrend. We have seen a pullback recently of that, and this bounce has taken place on a 38.2% fib area. And yesterday what's happened is you've seen a lot of movement during the course of the day, but pair, the euro closed quite strongly during the US session last night, and then the Asian market has literally taken it from its close and taken it higher. And what it's done is it's now testing previous highs. Okay. If you want to go for bodies, another good example is you can see that pair has flattened out these two highs here. You can see it's a bearish Arami, an indecision candle followed by a decision to the downside. The high of that was 13716, so price is failing to trade and close higher than that area there for the last 4 days. So that's definitely a resistance level. So ideally what you want to do is you want to make sure that you can note that on your intraday charts. Okay, let's see if I can draw a straighter line. It's so important to get these lines straight. There we go. So intraday price needs to trade above 13688 and close above 13688. Okay, you'll notice that we've had swing lows in this case, and this one is still in this area. It's still lower than this, so it's still classified as negative or downside movement. So what we want to see in this case, if this is to remain negative, is for price to close lower than yesterday. But with this candle here piercing this 20 period moving average, it's given us a good indication that there's still favorable for further upside movement. We have our blue candle and the CTC is in our favor, but if this is all to remain positive in our favor, we want to see price obviously trading higher than this swing here and closing higher than that. If it closes higher than that, then it confirms it's going to be, this is now the next swing and it's higher than this one, so ultimately what you're seeing is that taking place. Okay, a bounce above 1388, and this is a hammer. It's hammered out at bottom, and now we're going to see a reattempt of the 1385 or 13867 mark. Okay, during the course of today. So it'll be interesting to see. We need to see a close higher than 13 of the previous high. In this case, it'll be very foolish not to see if there's a close higher than 137. You can see we've had a pause during the latter part of US session yesterday, and then a bounce to the upside. That has now created this uptrend, and now we want to see some sort of action happening. We don't want to be trading boxes, this noise level here. So find out where the Asian market low was. In this case, if you're trading wicks, and box it, put a nice clear definition around it, and then wait for it to break out. If it breaks out, it needs to close higher than 1370 strongly. Okay, or if it's going to fall back down again, then look for it to close below the box and look for possible targets to the downside, i.e. there's one here at 1365, still a pause there at 1365.50, very small pause. There's another one down here at 1359, and then ultimately right down here just above the 1354.50 mark. This is on a, if I'm not mistaken, this is on a 30-minute chart. There we go. So you can see how I'm placing it all together. Okay, that's how it should be. Okay, so as it stands now, if you want to see the pair trading higher than this line here at 13688, I've got 70 on my one on the 30-minute. That's the first hurdle. And then 1388 is the second hurdle. Okay, so that's it for euro. I'll be back next with the sterling against the US dollar. Okay, the next pair we're looking at for this morning, the 23rd of February 2011, is the sterling against US dollar. I'll just bring up the daily time frame to see what price has been doing. You'll notice that we're in an uptrend. I'll draw this really quickly. You can see that our bounces are still higher than the previous one, and what's happening right now is we've seen a lot of decision the latter part of last week, and then we closed on indecision, and then we've seen a bearish candle to the downside. So decision, indecision, decision. And what's happened now is you've seen the Asian market open this morning favorably from the close yesterday. We saw sterling close lower, and this close happened above this trend line, and now we've seen the Asian market take it higher during the course of the evening GMT. So now we're looking at this trend line to be our saving grace, or in this case to act as a prop and to help keep the price on this above this level. So if it's trading above the trend line, above the 20 period moving average, you can see the moving average is nicely fanned out. It tells you that the momentum still favors the upside. We're looking for further pushes to the upside. In this case, CTC is in our favor, as you can see on a daily time frame. So we should be looking for further momentum to the upside during the course of today. Failure to keep these highs and to progress further, and a close below yesterday's candle, or the low of yesterday's candle, and the close of this trend line will now null and void. Will make this trend line null and void, and we should be looking for a change in market sentiment. Okay, so let's have a look at the intraday. We have the hourly chart. You can see how we had progression to the downside. We had an all-time high. We had a pullback, and a further extension of that downtrend. And what you're seeing now is a trend line on this time frame, the hourly, being tested as we speak. Okay, let's get rid of the fib line. You can see we had a previous resistance support level at 1617, and make a note of that. Resistance, breakout, pullback, continuation. Now we're seeing breakout, resistance, resistance, resistance. Fell down to previous support and resistance line around about the 1612 mark. Resistance, breakout, pullback, and then bounce back up to the upside. A nice exhaustion candle to the downside on a 200, very strong resistance level, support level. And now what's happened is we've seen the pair trading higher during the Asian market session, and that candle here, if it continues to the upside, has now formed a new swing. Okay, you can see that swing. So support, swing higher than that, and another swing to that. It needs to break higher than this, guys. Otherwise, what we could see is this pair just form one of these candles here, an exhaustion candle in an uptrend, confirming a change in market sentiment, and this becoming a resistance level, i.e. the 50 period moving average also moving swiftly ahead of it as a possible ceiling level. You can see the price being dragged down again, and then because we're in a negative trend, you can see these swings are still to the downside. We could see further downside movement. It needs to close higher than this to confirm a break of this trend, and then trading above 1621 going into the remainder of today, because then it's trading higher than previous support and resistance lines. Okay, you see I put it all together. CTC is in our favor now. You can see we had our blue and our blue candles, and the CTC on our side went red. So, and you can see that on smaller time frames. A 30-minute, for example, you can see the push to the upside. 15-minute candle trading higher than the 200 period moving average, which is a strong indication, which is a good indication of further upside movement after a breakout. So you could have seen, if you'd woken up and you're looking for, you could see that these are squeeze pattern on this time frame. Needs to trade higher than the 200 period moving average. Has to. You don't want to be faked in. A noticeable support and resistance level in this area here. Wait for the breakout now. This candle, the 50-minute candle, needs to close higher now, and then we should be looking at targets to the upside. Okay, so that's sterling against US dollar. I'll be back next with the US dollar against Swiss franc. Okay, the next pair we're looking at is the US dollar against Swiss franc on a daily time frame. You'll notice yesterday we saw the US dollar started trading slightly higher to begin with, and then as the day progressed yesterday, we saw the US dollar lose ground against the Swiss franc. And what you're seeing right now is a possible retest of an all-time low at 9350 for this pair. I think as things continue to progress unfavorably in the Middle East, i.e. Libya, um, Tripoli is just falling to pieces at the moment now. Gaddafi's been ranting and raving on TV, and there's talk circulating the ranks that Libya is going to actually stop its oil production, its exports of gas and oil, which is going to play a huge factor, especially for the UK as well as other Western countries who have heavily invested in Libya, and well, it's just in the Middle East, to be honest with you. But if Libya go ahead and stops all exports of their oil and gas, we're going to see a ripple effect occur globally. So daily making strong movements to the downside. This candle closing low has formed another swing to the low side, so we have a first swing to the downside, and now it's brought us back to this 93500 mark. Strong support level. Will we see support now? Will we see a third support level occurring? If we do see a bounce here, then we'll probably look at the high of this candle and this one over here of 9488 as first target, and then second target the 50 and 20 pair moving averages, and then vice versa. So let's have a look at intraday on this pair. You can see the steady ground lost. If I pull up an hourly chart, you can see the swings down to the downside. Very sharp losses. You can see how the CTC worked beautifully at this time frame here. More reds and blues. I think a lot of people here would have got slightly stung. Price action would have taken out a lot of positions here and reversed, and you can see how the breakouts happened on this pair quite nicely, which is beautiful to trade. There's one here 960, another pullback here, for example, 950, 945 is another one. Trading channel breakout continuation. See pause, breakout. So movement is definitely to the downside, but you'll notice now the pair has found a slight support during Asian market trading sideways at the moment. This could just be a consolidation before we see a further move further to the downside. You'll notice that straight away I can see a bit of hesitation around the 93900 mark. We're looking at an hourly chart here, guys. So as it stands now, we want to be trading higher than the 93900 mark on for a definite indication of price movement. We don't want to be trading until such time as if this is going to be a bounce and a close higher, because you see on a daily time frame we are now coming close to a very strong long-term support area. We might see a consolidation for a while, and if things still go wrong or nothing really happens in the Middle East and no calms, that I can guarantee we'll probably see the US dollar lose still some more ground to the chief, as everybody moves to the chief as a safe haven. So if it fails to break above 939 today or the rest of this week, then definitely look at a break below 93650, a close low for further extensions to the downside. Okay, that's it for the US dollar against Swiss franc. I'm going to be back next with the last pair of the day, the US dollar against Japanese yen. Okay, in front of me we have the US dollar Japanese yen pair on a 6 time frame CTC strategy template. Let's have a look at the daily to give us an indication of what's been happening. But topsy-turvy for this pair. You can see that the swings on the daily time frame are higher, so we know the market sentiment is slightly edging higher as the months have progressed. The one thing it hasn't done is it hasn't broken a major resistance level, i.e. here at around about 84. Let's see, 84.20 if I'm not mistaken. This high is higher than this one here, but still not higher than that, so pretty much channeling at the moment. You can see if I just take a mirror image and just place it on the top, you can see resistance level in that same time frame. Support, breakout, resistance. So channel at the moment, and what we're seeing in the last couple days, last week, is price moving swiftly back from the highs it posted just here just below the 8400 mark on this time frame, and we're now trading between the two moving averages on this time frame, so a bit of consolidation taking place. Yesterday you saw the US dollar trading slightly higher, like I mentioned on the US dollar Swiss franc pair, the chief, the Swissy, made some huge highs during the latter part of the day, and then during the course of the evening, the US session wise, it just took it all back. We saw a huge pull back down, and now by doing so, this was a slight pause, and this has caused another swing. So ideally, you can see trend direction is that. Okay, so the pair needs to trade above the trend. You need to be trading well above the 20-period moving average, which is now a resistance level. You can see during Asian market trading, the pair has failed to close higher than the 20-period moving average on the Asian market. So let's have a look in today. You can see as we speak now, pairs trading below the 200-period moving average on a 4-hour time frame, and you can see how the swings are lower. So we know trend direction is down for the moment intraday. 4 hours down, daily we're looking at it down because of the down candle yesterday, and now what we're seeing now is a pause. You can see we have a slight support and resistance level around the 8260 mark. This coincides with the 200-period moving average, and what we want to see for further extensions to the downside is a definite close below the 200-period moving average on a 4-hour time frame. You get that, and then we can confirm that the move into the downside is far greater. You can see how, for example, here, failure to break higher at this area here at 82.20 for argument's sake, close higher than the trend line. We've seen the price very volatile yesterday, the latter parts or the early parts or the mid parts of the European session going into the US session. Very, 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 very volatile. And then you've got a huge down candle. It didn't take us that far until we hit support, and then it pulled back, and then we've seen a close slightly lower than the 200-period moving average. This candle now, this next 4-hour candle, needs to close lower than that 200-period moving average if possible. A lot of wicks here, hammering out at bottom possibly. That won't make any difference until we actually see a candle closing higher than this little swing over here, because that's the next swing to the downside. So you can see swing low, swing low, swing low, swing low, swing low, swing low. Okay, so now we've got to wait for the candle to close lower than that, and it will definitely confirm further downside movement, and then we just look for a possible target to the downside. We can see here, for example, we've got a possible trend line. We've got higher highs. If I just stick that on, then we look at about 82.20 as a possible target, and you can see how that's support and resistance in the past. Okay, so piece it all together. Here's another one down here, for example, 81.95. But if it doesn't fail to close, then look for further extensions during the course of the week. Okay, if you look at a 30-minute chart, you can see it a lot better. Look at that, swing low, swing low, swing low. So a lot of momentum to the downside. Trend, if this is to be favorable, then the pair needs to be trading higher than the trend line, as well as higher than the previous swing. Otherwise, it's pointless. They'll be trading against resistance level, a previous support level, and resistance level at the same token. Okay, so it has to be trading above 82.90 to see further extensions to the upside. Otherwise, what we can do is just wait, bide our time. This is going to pull back to around the 82.70 mark. Failure to break higher than 82.70, or the trend line could just see the price reverting to the downside during the course of today. Okay, guys, that's it for today. Make sure that if you're trading you're taking your profits when they present themselves. Make sure that your money management rules, you abide by your money management rules, and most importantly, just enjoy your trading. Don't look for trades. Trade what's on the chart. Those people who go around looking for positions when there's nothing to trade are the ones that get stung each day. So keep it simple. Look at price action. Price action will dictate trend direction, and just trade in the direction of the trend. Look for possible breakouts and trade those breakouts, because that's where you're going to find your pips a lot quicker. Okay, that's it for today. I'll see you tomorrow. All the best. Take care.